Hey everyone, and welcome. Today, we're going to do something a little different. We're going to take a real US market report from a single chaotic trading day and use it to learn the exact financial English you hear on Wall Street. We'll break it all down piece by piece. Ready? Let's jump in. Okay, let's start with a real-world puzzle. You're reading a Japanese market summary, and you see this phrase, "Shijo wa zenmen yasu." You know it's not good news, but what's the professional way to say it in English? What phrase would an analyst on TV use to describe the situation? Well, we are about to find out. So here's our roadmap for today. First, we'll get the big picture. Then we'll dive into the top 5 things that actually move the market. After that, we'll connect the dots and see the cause and effect. And finally, we'll look at what's coming up next. All right, part 1, the big picture. Before you get into any of the details of a market day, you've got to get a feel for the overall mood. You know, what the pros call market sentiment. Was it a thumbs up day or a thumbs down day? Well, on this day, it was a definite thumbs down. The sentiment was negative. That Japanese phrase, zenmen yasu, pretty much means everything was in the red. So how do we say that in fluent financial English? And here's your answer, a broad-based sell-off. That phrase is perfect. It tells you it wasn't just one or two industries having a bad time. The selling was widespread, across the board. That's a fantastic term to add to your vocabulary. So we know what happened, a broad-based sell-off. But the real question is always why. Now we're going to play detective and look at the 5 biggest market movers that caused all the chaos. And we'll learn the key English term for each one. First up, our first clue is this phrase, kanze fukakujissei no keizoku. The keyword to lock onto there is kanze, which means tariffs. This was a huge cloud hanging over the market, making investors really, really nervous. In English, we call this tariff uncertainty. See, the report mentioned that the president was taking the tariff issue to the Supreme Court. That legal battle created a huge question mark. And if there's one thing the market hates more than bad news, it's uncertainty. Okay, our second market mover is rising bond yields. And listen up, because this concept is absolutely crucial. A bond yield is just the return you get from a government bond. But when these yields start to climb, they can send shockwaves through the entire stock market. And here's the proof. Look at the data for the 10-year and 30-year US bonds. You see those changes. They look tiny, right? Just fractions of a percent. But trust me, in the massive world of bonds, moves like that are a really big deal. So why does it matter so much? And more specifically, why on earth does this news about government bonds hit high-flying tech stocks so hard? I mean, on the surface, they don't seem connected at all. But there's a powerful, direct link. Here's the secret, and it's actually pretty simple. Tech companies are often valued based on big profits they're expected to make way out in the future. But when interest rates, or bond yields, go up, that future money is worth less in today's money. It gets discounted more heavily. That's why rising rates can be total kryptonite for growth stocks. Which brings us perfectly to our third market mover. The report used this awesome slang term to describe the situation, the tech wreck. And it pointed out that a giant chipmaker, NVIDIA, was leading the charge downwards. I love this term, tech wreck. You won't find it in a formal dictionary, but you'll hear it all the time on financial news channels. It's just a catchy, informal way to say that technology stocks are getting hammered, often because of those very interest rate fears we just talked about. Mover number 4, anzen shisan juyo no takamari. The key words here are anzen, safe, and shisan, asset. So when investors get spooked and the market looks dangerous, what do? They look for a safe place to hide their money. And the English term for that is a safe haven asset. It's like a financial storm shelter. When stocks are crashing, investors flee to these assets, hoping they'll hold their value or even go up. The most classic safe haven of all time is gold. And would you look at that? Here is that exact idea playing out in real time. On this day of turmoil, gold didn't just rise, it shot up to a new record high. This number isn't just a price, it's a giant flashing neon sign of fear in the market, a classic flight to safety. All right, our fifth and final mover zooms in on a single famous company, PepsiCo. The big news that shook things up was that a well-known fund, Elliott Management, had bought a massive stake in the company, and this wasn't a quiet, friendly investment. This brings us to the term activist investor. An activist doesn't just buy shares and hope for the best. No, they buy a huge position specifically so they can get a seat at the table and publicly demand changes. Things like cutting costs or selling off parts of the business, all in an effort to force the stock price higher. When an activist shows up, you know you're in for some drama. Okay, so we've got all our clues, all our market movers. Now in this section, we're going to put the whole puzzle together and see how these different forces impacted different parts of the market. This table really sums it all up nicely. You see technology with a negative outlook? That's what we called valuation pressure from those higher interest rates. Financials are neutral, kind of caught in a tug of war. But then you see precious metals shining with a positive outlook, all thanks to that safe haven demand. See how each story we learned connects? Okay, we've analyzed the past. For our final section, let's turn our eyes to the future. What should an investor be watching for next? This is where we learn the English of forecasting. Here are the 3 big dates to circle on your calendar. On September 3rd, you get the ISM Index, which is like a health checkup for the manufacturing economy. On the 6th, we get the huge August jobs report, a key indicator of economic strength. And then, the main event on the 16th and 17th is the FOMC meeting. That's when the U.S. Federal Reserve announces its decision on interest rates, and the entire world holds its breath. And that leaves us with one final thought. After everything we've seen today, which of these key terms do you think will dominate the headlines for the rest of the month? Will it be the ongoing tariff uncertainty, or will the fear continue, driving more safe haven demand? The answer to that will write the next chapter in this market story. Thanks for diving in with me today.